Kingston Properties. They want to do an APO right now, just like what Barita or JMMB did. But what are the prospects for this company? Welcome back, guys. I'm Jamie. Now, if you're new to my channel, please subscribe and turn on your post notification. I normally upload videos on investing, personal finance, and business in general in Jamaica every Monday and Wednesday. So if these are topics that you like, you can also go ahead and leave a thumbs up. That would be great. I have a giveaway going on, so you can look for the ticker that I've placed in this video to enter. What you would need to do is to find the ticker and comment the ticker and the meaning in the description below to be entered into the drawing. Now, if you need more information on this, I'm going to leave the details in the description below as well. You can also connect with me on social media. I'm on Instagram or Twitter. I'm on Instagram at JA_Radcliffe or Twitter at JA_Radcliffe2030. Kingston Properties, they may be doing an APO. Now, today I'm going to take a quick look and see how Kingston Properties has been doing if I was to invest in their APO, if they decide to do it. Now, I personally don't own any shares in Kingston Properties. I've never really followed the company because I believe that the price has not been moving for me to get involved. So we're going to be looking at the company from a financial standpoint and see if, because this APO is coming up, if we should get involved to see if we can probably make some money out of Kingston Properties. So first off, what does Kingston Properties do? So Kingston Properties is a REIT, so a real estate investment trust. Pretty much what they do is to buy properties and rent it out. Now, based on their website, they were incorporated in 2008, but they were not always called Kingston Properties. Before that, they were called Carlton Savannah. They were also one of the first companies to be registered on the Jamaica Stock Exchange as a REIT. Now, even though in these times with the pandemic, Kingston Properties pretty much has not eased up in achieving their strategic goals because they are currently still buying properties in Jamaica and even Cayman Islands recently. And at the end of 2019, they had like 9 properties under management. So they have 9 properties that they're actually collecting rental income from. One of the biggest things with REITs is that they should normally pay very good dividends. And that's because you see, in the United States, to classify as a REIT, you need to pay out 90% of your income to your shareholders every year. But in Jamaica, it don't really follow the same logics, if you understand what I'm saying. And the reason why I say this is that, you see, because in December 2019, KPREIT, I call them KP from now on, actually paid out about 20% of their income in dividend for that entire year. Alright, so I'm going to be looking at KPREIT operation between 2017 and 2019, but I'm going to be focusing mainly on 2018-2019. Alright, so first we're going to see the actual money value of dividends paid out between 2017 to 2019. I also did a video on dividend payment and some of the better ones in Jamaica based on some information I pulled from the Jamaica Stock Exchange for the past few years. I'm going to leave a link to that video up here as well. When I did a quick check on how much dividends KP has paid since 2017, it added up to 0.00326 cents in US. To be honest, for a REIT that is actually collecting rental income, this is basically very low. This is not a lot of dividends. So in 3 years, you would have only collected 0.00326 per share in dividends. Now, why I say this is not a lot? When I checked their 2019 annual statements, they had a shareholder that had 10 million units, right? If they had that 10 million units since 2017, we're going to assume this, they would have only gotten $32,600 US between the 3 years for dividend income, which is not a lot for an investment of that scope. Personally, it might have been better if they were looking at capital appreciation for KP, but we're going to be checking on the price and see how it has been performing in a little bit. The only redeeming factor I saw with the dividend is that they have basically kept the dividend payout steady over the past few years. So if you're someone that is expecting dividends, then you're going to have an idea of how the dividend payments are going to be for the years to come. Now, KP also has a dividend mandate that they're saying that they would pay out up to 90% of the earnings, just like I said about the US REITs. But as I said, this hasn't been going on. The best year, or the year that they paid closest to 90%, was in 2018, where they paid about 76% of their income in dividends. But when you look at this in actual monetary terms, the only reason they paid that much in dividends is because they made less money in 2018, to be honest. Because they paid out 200,000 US in dividends for 2017 and 2018. But when you look at it as a percentage, in 2017, they only paid out 38.5%. So they paid the same amount of money in dividend, but as a percentage, it's less in 2018. So less money was made. Now, I just said that it might have been better invested in KP for capital appreciation, but after checking out the prices, to be honest, the price has pretty much been jumping between $5 and $8, and it went to a high of like $12 in 2017. Now, if you recently bought the stock, the best you would have probably gotten is, if you got in at about $5, you could have probably sold at $8 and got some appreciation there. You would have actually gotten a good return, to be honest. And the last time I saw where it closed like over $8 was in January of this year. So I actually used the closing price for my analysis. So what that means is that it was an average of all the prices that happened in the day. So there is a possibility that during the day, KP share actually sold for over $8 on some days. A lot of sideways action I can see from the graph here of the price since 2017. Now, in my opinion, KP may have done their initial stock split in 2017 a little bit early, because we can see where the price was basically just taking off at that time, where they doubled and just did a stock split, and the price now is pretty much going sideways since then. No real value has been gained on the price. Now we're going to be looking at how they have been performing financially. Now, in the interest of time, I actually can't go over everything, but I'm going to just pick out a few things that I normally look at and see how KP has been managing these items over the past few years. The first thing I'm looking at is what KP is saying is their highlights for the 2019 financial year. Two items in particular. Now, first, KP has said that they have boosted rental income by 7.4% year over year, and they have also made over 800% in net profits. Now, 800% more in net profit with a boost of 7.4% in revenue, in rental revenue. I need to know what make up that 800% and if I can expect it to continue into next year. When I look at this 800% gain, the first thing I notice is that they had an abnormal other income. So they have posted other income of 1.5 million US just for 2019. Now, when I dug deeper, I found that this actually was made up primarily of a fair value gain on property. Now, if you don't know what fair value gain is, I'll put it in a very simple terms. Let's say you bought a stock and you bought it for $10, right? And over time, the stock has increased and the price has gone up and it is now at $15. That $5 that you have gotten on your $10 investment is your fair value gain. And the reason it's called fair value gain is because, yes, you have made $5, but it's not your $5 as yet, because the only way to get this $5 is if you sell the asset. So this 1.6 million market, yes, KP can say they have gotten it, but they're not going to see cash or actual money until they have sold whichever item or whichever property has been revalued to get that 1.6 million. The next thing I want to look at is how they are managing expenses. Because one of the biggest things with businesses nowadays, they need to manage expenses to ensure that they keep them low so that the bottom line is better at the end of the day. So between 2018 and 2019, KP has like pretty much the same level of operating expenses, because it dropped in 2019 over 2018 by like 0.05%. Not a lot, but what that show basically is the expenses, they're basically moving in one straight line, which is good, because if you're having 7% increase in revenue, that means that 7%, once the expenses stay the same, is going to try and translate as much as possible into net profit, which they should actually pay you out in dividends if all goes well. For a company that offers rental services, because Kingston Properties offer rental services of commercial assets to clients, you need to see how it is that they are collecting the rent from these clients. Are they being owed these rents? Understand me? Now, when I look at the financial statements for 2018 and 2019, I can see where the accounts receivables, it pretty much double. In 2018 was like 373,000, and in 2019 we see just shoot up to 642,000. So it basically double. But one thing I need to know is that accounts receivable sometimes is not just like the rent alone in KP's case. So you have to dig deeper and see what is there. When I checked the notes, I saw that the rent outstanding was like 46,000 in 2019, while in 2018 was 88. So even though receivables doubled, it wasn't a case of KP not collecting the rent. So 46,000 out of millions of dollars of rent, to be honest, it probably is just 1 month rent when you really look at it. And you can see where that's actually almost been cut in half. So they're collecting their rent better in 2019 over 2018, in my opinion. Now, I normally also look at the cash position of the company. And for KPREIT, they're actually in a very good cash position in 2019. The reason I pay attention to their cash position is I need to know how the company is going to settle its short-term obligations. So I need to know that when they get a bill tomorrow, they can actually pay it. One of the things is they always have loans and so on. So you need to know how they're going to settle these loans, because you don't want the banks coming in and winding up a company, or shutting it down when you have your money invested in the stock. So you need to know how they're going to cover these loans. Do they have money to cover these loans as they become due? Now, in 2018, KP had cash equivalent. So it's not just cash alone. So they have like short-term investments that they can turn to cash that are pretty much liquid. So they can turn to cash really quickly of like $1 million. And by 2019, it jumped like 1,300 and something percent to $15 million in just 1 year. So that's a very good cash base. And I think what happened here, this is the money that they had planned to use to buy the properties that they bought here in 2020 recently. Now, I just told you guys about the loans, and the loans is the next thing we need to look out for, because you need to know how much loan the company you're investing in has. And for KP, to be honest, in the grand scheme of things, based on their balance sheet, they didn't really have a lot, or it's not overwhelming in their case. And this basically grew by about $1 million between 2018 and 2019. So nothing great right there, in my opinion. You understand me? So debt-wise, they're in a very good position as well. Now you see, these are just a few things that I take into consideration when I'm looking at a company. And for me personally, I think the balance sheet and the income statement of KP, they are very good, to be honest. My problem with KP is that over the years, you don't really have a lot of appreciation in price. And then even if you're going to invest in KP for dividends, you're not seeing a lot of dividends coming through as well. They say that their dividend mandate is to pay up to 90% in dividends on a yearly basis. But KP has pretty much capped off their dividends over the last few years and has been paying roughly the same amount. They paid what? $450,000 in dividends for 2019, which amounted to only 20% of the month funds that they made for 2019. And as an investor, when you pretty much not getting a lot of returns, then it doesn't make sense for you to invest in a company, to be honest. So while I think on paper KP or Kingston Properties is a very good company, I personally would not invest in their APO if they decide to come to market, because I'm not getting a lot of capital appreciation. I don't see the dividends really coming through. You would need to own a whole heap of shares for dividend to come through. And for example, the top 10 shareholder that own 10 million units, right now the price is around $7 something. And if you check up 10 million units times 7, that's 70 million. And they're only making what, 30 something thousand US over the 3-year period. So if you take up 70 million and make 30 grand over 3 years, it not really pay off in my estimation, to be honest. So KP for me is a no-go if they do decide to go ahead with the APO. Thanks for watching, guys. So you see, if you like the video, just go ahead and hit that thumbs up button. In regards to KP though, there's still a whole heap more information that would need to go over if it is that you're going to decide to invest in their APO, if they decide to do it. So I've only just touched the surface and just look at a few things that I look out for to see where the company is heading in a general direction. Now, make sure you do your own research if you're planning to look into KP into the near future. Alright? Don't just take my word for it that it's not a good company. Well, I say it's a good company. I just wouldn't invest because they haven't been moving how I would like. Now remember, I am not a licensed financial advisor, so before you make any money decision at all, talk to your financial advisor first. And until next week, bye-bye.